Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. As usual, we've got a very full program for you. We're going to start off with a legislative update from Mark Peterson, talk about what's happening with the Biden administration. Then we're going to get into what's going on right now with the reopening of the PPP program and talk about how things stand with the SBA and the lenders related to processing those Draw 1 and Draw 2 applications. We're going to have our regular update from Lisa Simpson covering some of the latest guidance. And then we've got a special session today on hot tax topics. So once again, you can earn CPE by responding to 75% of the pop-ups. You have this bottom toolbar where you can download the materials such as today's presentation. You can also ask questions. And we do encourage you to refresh your browser if video freezes. And to access links in the deck, you need to download the file. You cannot just do it when you're viewing it live. So with me today, we've got a couple of the leaders from the tax area, Carrie Weston and Amy Wang Miller, and they're going to be covering the hot tax topics. Lisa Simpson's with us as she always is, and we've got Mark Peterson who's going to be giving the advocacy update. So let's jump right into it. Mark, why don't you come on up? It's a busy time. It's a busy time as we're talking to all of these stakeholders as we've been doing for the past year with all this change. So we've been active with the Treasury and SBA, the firms, a lot of communication with the firms over the past week, a lot of communication with the lenders on what's going on with their activities, as well as other members of the ecosystem. What we try to do every week is to bring you the best available information. We're going to be bringing you some available information, some latest information that we just gathered over the past 24 hours. And Mark, now, so we've given you 2 weeks. You've had 2 weeks to kind of do a good assessment of the Biden administration and what's happening and where it's going. So let's. I know you're going to kind of cover. We're right in the middle of executing this big business relief package that was passed at the end of last year, and we're also going to start talking about some future business relief activities. So look forward to your update.
Yeah, no, absolutely, and that's been a priority that's been announced by the new administration and the new majorities in Congress. So I'll talk a little about what we're seeing for the next stimulus package. Meeting a lot of new members of Congress and new members of the administration virtually. So we're starting to work through that. We're starting to see the administration get confirmed. So Janet Yellen going over to Treasury. There was a hearing for Guzman, who's headed over to SBA. We think that confirmation could happen as soon as next week, which will get her there. And then also the teams start to fill in outside of those that require confirmation. So the agencies get up and running. We've got folks to talk to, ask questions of as these ongoing programs get implemented. The other big news this week, Eric, is the power sharing agreement. As everybody knows, it's a 50-50 Senate split with tiebreakers by the vice president. But what that requires in the Senate is the Republicans and Democrats come up with governing rules for the committee, procedural issues related to how they operate on the Senate floor, and even things like funding of staff for the committees. They have actually concluded that, which means that they can move forward. That was a kind of a hold up for a little while. So they're moving forward on that. One of the elements of the negotiation in there was the filibuster. And the filibuster is the requirement of 60 votes for most issues. That has been overridden in recent history for court nominations, was under some pressure about maybe that it should be reformed. But it did withstand those negotiations. And at least for now, it is still there, which requires bipartisan. When you, again, inherently with a 50-50 split in the Senate, if you need 60 votes, you're going to have to get somebody from the other side of the aisle. Go to the next slide.
And Mark, I mean, what you're seeing here, it seems like there's a lot of clarity. I mean, a lot of clarity. I mean, earlier at the start of the year, it was undecided in Georgia. That got decided, and now lots of clarity with how Congress is going to function.
It is. It helps too. So now we got agendas moving forward. The committees are meeting. The House and Senate committees have done their assignments. And so we know who's going to be sitting in committees that we care about a lot. The Tax Committee, Ways and Means and Finance, Financial Services, the Banking Committee, Budget Committees, which is extremely helpful to figure out how we're going to move forward. But reconciliation is very important for two reasons. One is they're going to utilize this process for this first stimulus package. And then there's the possibility that there may be another opportunity to use it later in the year on what potentially could be a tax bill, which is something that would obviously impact the profession. So basically what reconciliation is that it allows you to move forward with budget related issues with a simple majority. But you can only use it twice or once in a fiscal year, happens to be twice in this calendar year. So they're going to be using the first one, the FY21, in order to push forward the stimulus package is the way it's turning out. Previously, we've seen them done with majorities. So they've been bipartisan products. There have been discussions going on. I'll talk about that a little bit. But requiring the simple majority means that the current majority, the Democrats, can push forward their bill without requiring votes from the other side of the aisle. There are elements of it that get complicated and very procedural, where objections can be made to specific items because they do not have an impact on debt and deficit or spending. And then there's also, it's a process where it starts with the budget resolutions in the House and the Senate before they even get to the reconciliation package. Budget has passed the House of Representatives. It's being discussed and debated with amendments right now in the Senate, which means that clock is starting to tick. So what that indicates for all of us is that the process is underway and moving forward. And so as we still kind of work our way through this last package, we're going to be probably looking at another one shortly. And I can give you some highlights of that as well here, Eric, in the next slide. So basically there was the Biden package, close to $2 trillion, which the President Biden discussed in the election and in the time after the election about what he wanted to push forward. More funding for small business through grants, lots of funding for state and local, and then some direct payments to individuals. There was a group of senators, Republican senators, who recently went down to the White House to meet with President Biden, who had a counter proposal, much smaller, much narrower, more money for PPP, more money for EIDL, but did not have that state and local funding, and also had a smaller direct payment number. It appears the way things are headed, although there have been overtures across the aisle, it's more likely to be the direction of the larger bill. We don't have text yet. We just have outlines, so I don't have a lot of specifics. Another thing to note here, Eric, two things. If the direct payments happen, and there's still some discussion and debate over the size and the thresholds of who should get them, that could actually impact our filing season, because if the IRS has to push out those direct payments, it can have an impact on their ability to work through tax filing season and hit an April 15th deadline. And the other one I would mention, because we've talked about this in previous town halls, is with more money going out in aid to state and local, it can trigger the single audit issue. Which can catch clients and firms off guard. So we do anticipate there's going to be, I don't know if it's going to be 350 billion, but there's going to be money that's going to be pushed through there, and we're going to have to be sensitive to that at the single audit level.
Yeah, Mark, a lot of great information here. When you think right now we're right now executing this business relief program, and you've got legislation about the next, and you can think back to April and May when we had the Flexibility Act that came out. And I know they're even looking at some aspects of the current program. We're going to be talking about there's friction in the system. There's this, you can see this with the Republican senators here. There's a desire to make sure there's safeguards on how this money is being sent out to these businesses and making sure that there's not fraud. So I think that you see there could be there's even some proposals floating around about what's happening right now at the SBA. Do you
Absolutely
see they'll merge? You're going to see this, but there might be some adjustments and corrections to what's happening with our current program.
Absolutely. There is right now feedback directly going into members of Congress about how this rollout is going.
Mhm.
And they're definitely going to be lots of oversight, not only into the program, but then into some of the individual loans. You can see some oversight money being put in for PPP loans in this proposal. There's going to be some. There's definitely going to be a level of oversight. And it's a balance, right? There's bipartisan interest in making sure that money gets out to small business. But anytime there's public money, they're also trying to figure out how do they have fraud protection. And it's a tough squeeze.
And Mark, well, last question. You're always, when you're doing successive iterations of programs, you're always kind of, the regulators are always thinking about what didn't go right in the last one. And what does that sometimes lead to?
Absolutely. No, so they'll definitely be reviewing the rollouts of the past. They're currently in one, and there is some, like we've experienced in the past, where they're making adjustments. Sometimes that's communicated well, sometimes it's not. In progress. It's not just us hearing from the firms about their client experience. Members of Congress are hearing from small businesses in their district, and they're giving that feedback directly to SBA and Treasury, and that's all going on real time.
Yeah. All right, Mark, we'll bring you back for the open forum. So thanks a lot for that update. And definitely we'll be continuing this in future town halls. So just real quickly in the news, a lot of discussion about these new programs. Also, a lot of discussion about where businesses stand, these small businesses, and how they still absolutely need more business relief. So let's bring Lisa up, because Lisa and I are going to discuss kind of the state of what's going on with the SBA and with the lenders. So welcome, Lisa. This here is data that was released on Sunday by the SBA. It appears that every week they're going to be releasing the latest stats. And the big down arrow here is that there's going to be enough money. And that's something, even as they probably talk about this next version of legislation, they're gonna be able to see. There still is over $200 billion available. So through Sunday, $72 billion had been allocated in 891,000 loans. You can see here the top lenders, and the activity is decreasing, and there's reports that it might be at a couple $2 billion a day. But once again, it really does look like there's going to be plenty of funding. So we're going to get into that in a little bit more detail as we review this important letter that was issued yesterday by the AICPA to the SBA, highlighting some of the key issues that the businesses and firms are facing, and the lenders as well are facing, related to the rollout of this program. This material is in your package, so you can, it's in the resources area, so you can download that PDF. Here are the 4 points that were highlighted in that letter. So let's take a look at them. And I'm going to kind of bring you in, Lisa, here to comment as well. First, there's lots of issues in getting a successful application submitted to the SBA. So getting it into their system, because the SBA is running a lot of validation checks to try to identify fictitious or fraudulent activity. So to get accepted into the SBA E-Trans system is much more difficult than it was on round one. And there's not a clear path on how to do resolution on some of these applications that are denied. So they're denied acceptance. There's an error code that's given to the lender. Then the lender needs to understand how to correct that. And at times they have to go back to the business to get some additional information. So that's one, getting into the system. Then once you're in the system, and there's tens of thousands of applications that are getting denied right now. Once you're in the system and under review, 30%, almost 30% of those applications are being flagged for additional data. They have over 40 quote unquote error codes, which are flags, which they are identifying in this group of 30% of the applications that successfully make it into the system, to get more information from the lender, and then the lender needs to work with the small business client on that. These first two elements here, getting accepted, and then when you're put under review, once you're in the system, can take a week or more to get resolved. So you have those two big issues. Then the SBA is capping the draw one and draw two loan amounts. And there's a lot of good logic behind this, but it hasn't been communicated in an IFR or an FAQ that they're doing this capping. So then at the end of the process, your loan application amount can be reduced. And then the lender is communicating that to the borrower. Again, confusion is occurring, so more guidance needs to be issued. And when you look at all of this, what really needs to be done by the SBA and Treasury is clear communication to the businesses that there is enough money, and that they have put in place a lot of validation checks to safeguard, the taxpayers' dollars. But by doing that, this process could take a couple of weeks, and that's quite different than what people experienced back in April of 2020, when Secretary Mnuchin went on TV and said, we're going to get this money flowing in the next 36 hours. The processes that they've set up with these 50 different validation checks are going to require time to process it. And then if you look at the letter, there's some system issues. So Lisa, I know you're talking to a lot of firms. You and I just were on a broad lender call. So why don't you share some additional perspective on this?
One thing that stood out to me in talking with the lenders especially is that those first two challenges, 1 and 2 on our list here, have to be manually resolved. So there's a lot of time and effort involved on the part of the lender to A, figure out what the error code means, and then B, how to get with the loan applicant to actually figure out how to resolve it, and then not get caught in another loop with another error. We had a conversation about one of the most common errors is around a situation where, for example, a sole proprietor filed for a first loan using their social security number, but then following SBA directions, when they're filing for their second draw, they're using their EIN number and they're getting caught in a loop. So simple, you can see how the issues happened, but they're not easy to resolve. They're not easy to identify, and they're very manual. So there's a lot of anxiety in the system. We know that borrowers really need these funds to keep their operations going, and they were expecting it to be a quick process like it was in the first rollout, and that's just not what we're seeing today. So unfortunately, it does require patience and communication. So we're asking the SBA to communicate more broadly about it.
And things just like this, to even put a book out or some type, one of the suggestions was to explain, there's over 10 different validation checks on the first phase, and then there's over 40 of these error codes in the second phase. We should publish something that's out there so people then understand, what does that flag, quote unquote, error code mean, and how can they support the resolution? And there are false positives. These databases that they're doing these cross checks in are not perfect. In many instances, businesses are being asked to validate things that they shouldn't have to validate if the information was correct in those databases. So let's continue on. And just here, this is just a workflow slide that shows you where these things are happening. The firm process to support the client app, into the lender. So that you have to get it into the lender system, and there's some issues there. And then when the lender submits it to the SBA, that's where we're saying there's a lot of kickbacks occurring. And then 30% of all applications are going under further review inside the SBA. And that's taking, a week or so to get that resolution through the lender. And at times they're engaging the borrower, the small business. So here's just a summary of the overall environment. there's still questions. Lisa's going to get into some of the questions related to the program. So fluid and real-time guidance, implementation by the lenders, the standing up of their portal platforms, supporting their clients with those, the firms understanding all the information, then the small businesses understanding it, and then there's anxiety around getting funding, and that's probably one of the biggest things that we would welcome coming out of the SBA and Treasury is clear statements that there is enough money, and they modeled this in a way to make sure that there would be enough money. So they ran the models. They were confident that there would be enough money, and it actually absolutely seems to be the case. So let's get that out and get that out in strong fashion, so businesses know that it's okay if it takes 10 to 20 days to get this done. That there won't be any risk in them missing out like it happened in April. And then the second thing is just clearer communication on why it's taking longer, and also to explain that, as Mark Peterson just noted, they want to make sure there's more safety checks in place to prevent fraudulent applications. So Lisa, there we go. Summary, we're on time here, so I'll turn it over to you to kind of go through the latest updates.
Thank you. So we did get 3 fairly obscure FAQs. So there hasn't been much news about them, but I did want to call them out to you just in case you're keeping a numbered list of the FAQs and you're like, wait a minute, how'd I get to 56? So here they are. I'm not going to go through them. You've got a link to the FAQs there. And the first 2 obviously are more lender facing, but then the third one relates to a new category of PPP borrower now eligible. So dig into those FAQs if those are relevant for you. Then it's time for the weekly reminder that, Eric, if you'll skip to the next slide, that we're trying to help you easily get back to the actual authoritative guidance from the SBA and Treasury. So you'll find this in your materials with links to IFRs, FAQs, how to calculate loan amounts, the actual forms. So please do use that resource. And as we go to the next slide, I'll remind you that we're not going to have the answers to every question. This is, although we've been living the PPP journey for 10 months now, there are still just some very specific instances that we don't have any insights into and probably won't get guidance from the SBA on. So that's where you have to come back and look at the intent of the program and look at the guidance that is available to make those judgment calls and then document those decisions and drive on. I've been mentioning for the last few weeks that we do have a summary document that is available in your materials. We are updating that on a regular basis. And if we go to the next slide, you'll see that I've called out a forgiveness in purple. What we've done this week is we've added into that a conversation, a deeper look at FTE reductions, because that's going to impact your forgiveness. And we're actually going to have a deeper conversation about that just here in a couple minutes. So don't forget to check that resource first for your answers. If you don't see what you're looking for, we'll flip to the next slide. And I have big news. Our AICPA FAQs are back. We took them down so that we could update them for the Economic Aid Act, and kudos to the team for working so hard on that. So what we've done is we've tried to create a lot of the common principles and frameworks in that summary document, and then some detailed questions we'll be analyzing in the FAQs. So we've got 16 pages of FAQs. There's a darn good chance you might find what you're looking for in those FAQs. And you can see that we've broken them out by the different legislative and first draw, second draw issues. So please do refer to those. I'll also ask that you've downloaded the slides like Eric said, and in the back of the slide deck for today, I've taken some of the top questions that we covered last week, and I've moved those slides to the end. So if you somehow didn't join us last week, then you'll still be able to access that information. So flip to the back of the slide deck and you'll see what you missed last week.
And you got to download the deck for those links to work. So
Yeah.
once again, we already stated that. So a lot of planning discussions here, Lisa. We've been talking about this. This is different this time around, where you actually have the forgiveness as you're putting together these loan applications. So
Yes.
it's two factors you got to take into account.
We've been talking with some CPAs this week about how they're approaching the conversations with their clients. And as Eric mentioned, now we know a little more about what forgiveness looks like. So how does that play into the conversation? I've already seen a question come through about the number of employees. So if you're looking at the loan amount, it's based on your payroll for 2019 or 2020 or the last 12 months before you file your application. And that may or may not be relevant based on the number of employees that you have right now. But the loan application doesn't give us any guidance on what number to put there. So we've asked for clarification around that. There's nothing in an IFR that I found. There's nothing in the applications that I found. So we've asked for some additional information on that. But then you have to factor in, have your head counts changed? And if they have, then does the borrower want to apply for the full amount? And many do. Many want to maximize that loan amount because they've got a 24-week covered period and they've got the ability to pay some of these non-payroll costs with their PPP funds, as long as they're keeping that 60-40 ratio of payroll costs to non-payroll. But there could be some circumstances where you need to be having an upfront discussion about maybe you're not going to get full forgiveness. And is that what you as a small business owner want, or is that what your client wants? So just framing the conversation a little differently this time with some of your clients might be something to consider.
Yeah, and Lisa, as you're saying, we're hearing from lots of firms that are just having that discussion. There's some firms that their clients wanting to get the applications in early, so they've already got them in. But there's a lot of businesses that are still thinking through this, and just to look at what are the goals? What are the goals? Do they you want to maximize the loan amount? Then you may not be able to get full forgiveness. So that's just something to have that discussion with the client, and you make the right decisions. Because it is still an attractive loan at 1%, if you don't get full forgiveness, but that's just something that needs to be understood up front.
Absolutely. And many borrowers are going into this expecting it to be a fully forgivable loan.
Right.
So one of the factors that's going to drive whether or not the borrower gets full forgiveness is whether or not there's an FTE reduction. So this is going to be a really fun conversation, but let's dive in. So first of all, I've listed out where you'll get guidance on how to analyze and process the FTE reductions. I forgot to mention that we do have an FTE calculator within the resources that the PCPS team has developed. So you'll find that calculator on our site, and it's going to help you walk through the reduction calculation as well. So you've actually got some pretty detailed instructions on the forgiveness form. And so I would encourage you to refer back to that as you're walking through how to get your mind around these FTE reductions. We've included the examples in the summary resource that I mentioned. And before we get started, I just want to call out that borrowers with loans of $50,000 or less, and that's their first draw or their second draw. It doesn't have to be a combined total of less than 50. It's first draw or second draw, are exempt from these FTE reduction calculations, as well as the salary reduction calculation. So this does not apply if either the first draw or the second draw or both are under 50,000, unless they've got affiliates in the loans more than 2 million. So as a reminder, if we go back to conversations we were having back in June and July, the loan forgiveness will be reduced if FTEs are reduced. So there's a convoluted calculation that applies to both 2020 PPP loans and 2021 PPP loans. So you look at your FTEs against these comparative periods, February 1, 2019 through June 30, 2019, or January to February of 2020, caveats for seasonal employers. And then you compare your FTEs during the covered period to those timeframes. So the options are the same for first draw and second draw, and for loans taken in 20 and 21. So let's say that, as an example, you took a first loan in 2020, your covered period ended in November, and you had to make the decision to reduce your headcount. Now you're coming back to apply for a second draw, but the comparative period for your headcount is back to the original one. So I just thought that would be a really important conversation to have today. And we'll kind of walk through some ways to mitigate it starting on the next slide. And then, look at the impact on forgiveness. So the IFR, the regulations do allow borrowers to offset some of the impact of those FTE reductions, basically through two categories. You've got an FTE reduction exception, or you've got the safe harbor. Safe harbor is a blanket exemption from FTE exception or FTE reductions. And you've got two of those, an operating restriction or what I call the restore safe harbor. So we'll start with the reduction exceptions on the next slide. And you do have, these are position by position. So if you've got 300 employees and you've got 25 people that you want to take an exception for, you have to document these individually, line by line. But you have the criteria here to allow you to not get dinged for an FTE headcount reduction if some of these exceptions apply. So I'll just leave you there to read the slide. We'll scoot on to the next one, and we'll talk about those safe harbors, because I think these are really important for borrowers to understand. The first one is an operating restriction safe harbor. And in our conversations with Treasury, this was designed to be applied very generously. It's not supposed to be overly prescriptive. And it is, the intent of it is to acknowledge the impact that so many borrowers have had because of these lockdown restrictions. So if the borrower was unable to operate between February 15 and the end of the covered period at the same level of business as before February 15, 2020, then and it's because of these local or state or national ordinances around operating restrictions, then the borrower is entitled to this safe harbor. I've listed the dates for you there on what the operating, the compliance guidelines are based on. It's really important that the borrower document that they've been impacted through these lockdown or reduced activity restrictions. Get the dates in your files, get who issued the order, get how long the order lasted, because for some borrowers, that's going to come back into play if they're over 2 million and they're subject to additional scrutiny. So just keep that in your records. So that's one safe harbor. The IFRs give an example of it. I think it's fairly straightforward, but you've got a borrower with an online store and a physical store. Physical store gets closed down for a while. That means they satisfy the safe harbor and they're not subject to FTE reductions. We've got another safe harbor on the next slide that is what I call the restore safe harbor. It's a little more complicated. And again, this is going to apply for both first and second draw loans, no matter if they were issued in 2020 or 2021. So if your borrower reduced their FTEs between February 15th and April 26th, then restore them by this magic date, then they are not subject to a reduction exception or reduction in their forgiveness. So I've given you the dates there, but it's important to note that you have to restore back to the February 15, 2020 pre-pandemic FTE levels. That's a lot to take in. So Eric,
that's by the end of the covered period on the first and second draw loan. So yeah, a lot of information. And so you got to look at the guidance. Then the lenders, they're going to be supporting the forgiveness process. So that's a very important element. And Lisa, we just were on the call with the lenders. Not a lot of forgiveness applications being processed right now. Everyone's focused on getting these new applications in the system. But with that said, I mean, this is just great information to take into account as you're determining what that loan amount should be, or just making sure you're having that discussion with the client around all of this, so that their expectations are set.
So I thought it would be helpful to give you an example of how that works. And so basically, let's say we start with a second draw borrower who got a loan of $700,000. They're going to be able to choose an 8-week cover period. That was their decision. So get to the end of the 8 weeks, they've used all of that for eligible costs, and they've now they have to look at their FTEs. During their first covered period, back when they made their first draw in 2020, they had an average FTEs of 10. But if you look at the comparative periods that they have to look at, for one period they had 20, for another they had 15. During this entire second draw, they've only had 5 FTEs. So what does that do to their potential forgiveness amount? So if we look at the next slide, basically they have a 67% reduction of forgiveness because their average FTEs went from 5 to 15. So even though they did not reduce their headcount during the covered period, they could still face a reduction in their loan forgiveness. As Eric pointed out earlier in the conversation, this is it's a 1% loan. It's a 5-year term. That may be okay for the borrower, but just recognizing up front that this could be the situation is an important conversation to be having.
And this one you chose an 8-week period on.
Yeah, and they could have chosen a 24, and maybe they could have met that 60-40 ratio. Absolutely.
Yeah, the 20. That's the thing. The 24-week. You obviously want to run both scenarios.
And that's part of the planning conversation with clients, is helping them manage that covered period, because now you've got the flexibility of any time between 8 and 24 weeks to choose as your covered period.
A lot of information. So, well, Lisa, I'm not going to. Now we're going to have we're in tax season here, tax planning season. So we're going to bring in Carrie and Amy. So you can bring them up, and you can drop me down, and I'll be back with you for open forum.
All right. So I asked Carrie and Amy to join us because we do know that there are, just unusual challenges facing all of our friends in public accounting right now. So Carrie's going to dig into those a little bit, but I wanted Amy to talk to you about a developing issue around cryptocurrency. So Amy, welcome. Glad to have you back.
Thank you, Lisa. Okay, so I'm going to quickly go over this because I'm sure this issue on virtual currency tax is already on all of your radar because it occurred in the 2019 return as well, but it's important to highlight because we're about to head into filing season, and this concern is going to come up for many practitioners this busy season. So as you know, in 2019, the Form 1040 Schedule 1 added a new question about activity in virtual currency. Now in the new 2020 form, that question has moved to the front of the Form 1040, which is good because it's not hidden from taxpayers, but also the IRS form instructions have been updated with some new language that is a little vague. So what AICPA has been doing is we've been advocating since these questions have come out on the lack of guidance and confusion around this virtual currency question that's on the Form 1040. So what's the update from IRS on guidance around virtual currency? Well, unfortunately, last week, IRS Associate Chief Counsel John Moriarty came out and was quoted in the press confirming that IRS has no doubt there's need for guidance. However, with everything that's going on, understandably, with COVID relief and other things, virtual currency is simply not a priority at the moment for their guidance. And meanwhile, what is the AICPA doing to advocate for our members? Well, we're asking IRS Treasury for clarity on the new instructions. 2 quick examples of what we're doing. One question that I think is very important and relevant is how can taxpayers disclose transactions if they own an interest in a partnership that has activity regarding virtual currency? That entity would need to disclose that information to the owners, which currently is not happening right now. Another issue that we think is a huge risk for taxpayers and for CPAs alike is when a taxpayer checks no to that new 1040 question because they simply don't understand the question, and they think that the instructions are vague, which they are. What are the repercussions if we answer the 1040 question incorrectly? What are the penalties? What are the consequences? And that's another answer that we just don't have an answer to. We don't have an answer to that question right now. So even though the IRS isn't making this a priority, we're forging forward with advocating for our members, and we know it's an issue that you need more guidance on.
Thanks, Amy. We'll have you come back and join us for open forum.
Certainly.
Carrie?
Yes.
I love the title. Will they or won't they? Who's they?
They is the IRS and Treasury at this point. And anyone who's working in practice right now probably didn't need me to answer that, but happy to do that anyways. So, what I really want to talk about is, the things that we're hearing from our members, the things we're aware of at the AICPA, and just some ideas on how we're dealing with it, how you can deal with it, and some suggestions. So first of all, are they answering the phone? What we're hearing now is no surprise, but delays are already happening when you're trying to call in. And I'm speaking specifically to the practitioner priority service lines. So in addition to the longer wait times, we're also hearing about instances of dropped calls, and we're also hearing about the courtesy disconnect resurrecting its head and advising you that they just can't get to your call at this time and you simply get disconnected. So a couple of things I want to share as far as a tip there. One of the first things is, and I know many of you know this, but sometimes we all just kind of use a reminder. Call first thing in the morning. It's like the doctor's appointment. Make your doctor's appointment either first thing in the morning or right after they get back from lunch, because we know they're going to be jammed up after that, right? So think of it that way as well. As best as you can, call first thing in the morning. Another thing I'm hearing from our members is if you get the option for a callback, accept that option. You might be afraid, thinking, no, I've set aside the time now and I'm waiting. But I've heard from members that have done both. They've tried it and they've said, I took it, I waited 2 hours, they called me right back. And I've had others that have said, I waited on hold 4 hours, right? So personally, I'd rather leave my number, wait 2 hours and get a call than sit on hold for 4 hours. So it's not always offered. If it is, I strongly suggest that you take it. It's only going to get worse. Now, the other one is late notices. Obviously, we are hearing a lot of our members, because of the backlog and processing of mail, our members, tax practitioners, are getting notices. Their clients are getting notices for late returns, CP 2000 matching notices, penalties, disconnects, tax due. And the problem with this is that the letters are coming late. So a perfect example is your client, the first letter they may get may be the third notice. The first letter they get might be the certified advising that they're about to be facing liens and levies. And if you're getting that, you're not alone. Know that that is a very rampant issue, so much so that the IRS is actually acknowledging the issue on their website where they're talking about concerns. Now, they have some advice that you're certainly welcome to consider that, but I'm not a big fan of their suggestion. They say, maybe it's handled, so don't worry about it. Or if you paid, don't worry about it, or call. Okay, so we all know how that could possibly end up. So my suggestion is going to be, yes, the IRS is acknowledging it, but I still think it's really critical that you make contact on behalf of your client as soon as possible. So call the IRS, especially if you think collection activity is imminent, right? So pick up the phone, call, and ask for a collection hold. Request a collection hold. They will usually grant you 6 weeks without question, right? You could ask for more. And in fact, I would suggest you ask for more. And if you get a collection hold, obviously put a tickler on your calendar. And again, I apologize if you know all this, sometimes just good reminders, but put a tickler on your calendar so that you don't let that expire without taking some action. Another thing I'm going to suggest is the IRS says, well, you may not need to do anything because it may be resolved. If you don't want to call, so maybe in advance of calling, is get a record of account. So using the transcript service, get a record of account, see if the account's been settled, if the penalty's been waived, or if the payment's been received and the tax is no longer owed. And one way you can go about doing this is there is now a taxpayer tool, and I need to reinforce that. It's a taxpayer tool, a Get My Tax Records app on the website, and you can ask your clients to go sign up for that and then instruct them on how to pull a record of account transcript, and you can see if it's been closed out. If not, go back to the tip number 1 and make a phone call, request a collection hold. Next, I'm going to talk about some penalty relief, unless there's cause for me to pause now, Lisa?
I think we're good.
We're good. All right. But actually, if we could just go back a slide, I'm just nailing all these things through. So one other thing is penalty relief. We know that there were a ton of penalties, right? Because of the pandemic. People went into tax season with the best intentions, thinking everything would be normal. And then in March, which is when tax season really heats up, is when we all got hit by this and locked down. So there's a variety of penalties. People couldn't get under, failure to file, failure to pay, underpayment penalties. And as a result, we realized that the whole year is an extenuating circumstance, honestly. And so the IRS has actually, they've said that the processes in place are sufficient to help taxpayers with that. And that may be the case, but I would argue in a year like this, when there's got to be a serious increase in the penalties and the request for penalty release than they've ever handled, in addition to the fact that they're already backed up with just doing their regular job because they were impacted by the pandemic. I'm not certain I'm not certain I agree with that statement. And neither does the IRS, because our advocacy team has been trying to get the IRS and Treasury for months now to come up with some special measures for reasonable cause relief. The issue back to that, and Ed Carl may have updated you, is, the IRS has concerns, and rightfully so, that the bad eggs are going to come in and they're going to use any kind of blanket penalty relief to try and get out of things that are not related to the pandemic. Okay, so we've given them some suggestions on how things can be resolved. One of those things was to maybe set up a dedicated phone line. So as a result of that, the IRS has come back and said that they have advised their call center employees that if a taxpayer or their practitioner calls in, that they are to go ahead and consider a reasonable cause request for penalty abatement. Now, ordinarily, that would not be allowed to be done by phone. It has to be done in writing. But they've said they're making an exception for that if it's a COVID-related reasonable cause. And in fact, they've even gone on to say that if supporting information is still required to make the decision, that they will allow the practitioner or taxpayer to go ahead and fax that right then and there while they're on the phone. So I will say, though, in speaking to the members and practitioners, that we're not finding that that's being applied very broadly. So I don't think the message has trickled down to all the employee staff. So what I do is I would actually recommend that instead of maybe just taking the first time a penalty abatement and living with that, one other thing we can do is, have a conversation with your client, because it's really important to note that the decision is your client's. It's not yours. You can advise them, and in most instances, they'll accept your advice, but they have to decide. And that's whether or not you're going to request a first-time penalty abatement or whether you're going to go the reasonable cause route. So I think the key is discuss it with your clients, explain the pros and cons of either direction. And obviously you want to consider the amount of the penalty. If the penalty is less than your fees to go and get the penalty abated, I think it's a clear decision. They pay the penalty or they attempt to get abated themselves, maybe with some direction from you. All right, so assuming that you have decided to try and assist them, my suggestion would be to go the reasonable cause route first. And the reason is, the first time penalty abatement is nice. The pros are it's easy. You get a quick answer, you're done, right? The cons are you can only use it every 3 years. You don't know what might be coming, or perhaps you do know something is coming and you might need to reserve that. Additionally, your client may not qualify. So what I suggest is, before you get on the phone to the IRS, if you're going to request either one, I'd prepare a reasonable cause request. Prepare the letter you would have mailed. Gather any supporting documents and have them handy. Make sure you have a valid POA and that it's been processed on file, or have the client ready to call in with you. And when you're on the phone, be very clear in asking the IRS representative to consider a reasonable cause abatement. And the reason I say that is I have had some practitioners say they called in, requested reasonable cause, and the person on the other end of the line just ran through the process for first-time penalty abatement and said, yes, we've abated your penalties, but they used first time. So be really clear that's what you're asking for. And if they push back on a verbal consideration, ask them for the fax number and say, well, my understanding is that I'm allowed to fax you the supporting document for consideration. I'm not suggesting you make them mad, but kindly ask them and see if you can do that. They've been instructed to consider it within certain limits. One of those limits is the dollar amount of the penalty. They won't officially say what that dollar amount is, but unofficially, I'm hearing from members that penalties under $1,000, they are running the request, and penalties over, they're shutting them down immediately and saying, you need to mail this in. So that's just something to consider on the penalties. Now, on the Consolidated Appropriations Act guidance, everything that they just spoke to on the PPP and the employee retention credit, those are the things that are missing right now. We know what the members and what the practitioners are concerned about and what the questions are. They're trying to figure out how to compute certain things for the retention credit. They're trying to decide, do I go back on last year? Do I amend? Do I use it on the current year? How's that going to impact my P&L? We know that there are issues with the timing of the recognition of the loan forgiveness income. We know pass-through entities, S corporations, have basis issues. The only answer I can give you is be patient. We're waiting too. And the minute that we have some specific tips and guidance we can give you, we absolutely will. And then the final thing, and the hot topic I know everybody is worrying about right now, is will they or will they not move the April 15th deadline? Now, I didn't bring my crystal ball with me today, but what I will tell you is so far the IRS has held pretty firm that they are not planning to move the April 15th deadline. However, Commissioner Rettig was in a presentation just recently, and he made a statement that if there was another round of economic stimulus payments, they may be forced to move the April 15th deadline back to enable them to process that round of stimulus checks. So, one of the things they're suggesting, and we're suggesting, is, work like the April 15th deadline will not be moving, and plan and hope that if it does, you have a backup in place. So then, really just to go to kind of the things we're hearing about, and much of this has to do with what I've already discussed is, clients are very frustrated about IRS notices. They're blaming CPAs. I had an instance years ago where a really big client of mine, it was a C Corp was my client, and the individual shareholders were my client. They had a multi-year audit. I took them on, represented them in the examination, but there were mishaps with the IRS notices, and they got a notice of intent to levy. The owner, instead of calling me, even though I'd been working this for months, called the IRS. The IRS was a collection agent, or instead of a revenue agent, he was a revenue officer. So they're collectors. And he told him, yeah, I don't know what your CPA said. This isn't handled. You need to pay up now. We're going to, attach your bank accounts, fill in the blanks. None of that was actually true. The client proceeded to fire me, didn't listen to anything, and didn't want to see any of my logs or any of the work I'd done. And the very next day, we both got notices from the IRS that the examinations were closed. There was a no change, no balance due. So, it didn't make me feel any better. I still got fired and badmouthed by a client. So the point is, you could be doing all the right things, but your client's going to perceive that you haven't when they get notices that say you're not handling things. So we know you're frustrated. What I can say is get ahead of it, talk to your clients, communicate early and often, and let them know this is going on. And say, if you have any questions, any concerns, please come to me first. Allow me the opportunity. And then obviously on the April 15th deadline, we know there's a ton of fear and anxiety. And I can tell you that 50% of it is fear and anxiety that it won't be extended. And the other 50% is that it will. So, it really is a very personal issue. We are going to do our best to help you. And so just a few tips I'm going to share in this last couple of minutes we have is slow down, right? Slow down, don't panic, create a plan, and try your best to stick to the plan. And, I'm no self-help guru, and certainly I know this is easier to say and harder to do, but do your best not to worry about things that are outside of your control and focus on the things that you can do. And what you can do is shift your process, right? So usually we knock out the early returns early, and then we start hounding our more complicated ones towards the end of March. I'd suggest you flip that. Get the more complicated ones in early, process your extensions early, make an assumption that everyone's going to need to be extended, right? I'm not saying push the button, I'm saying get it ready, right? Then it's not as complicated and as stressful at the last minute. And if you haven't read the book Eat the Frog, you may want to do that. But the point is, eat the biggest and the ugliest frog first thing in the morning, and then everything else will be less stressful for you because you get the gross part out of the way. So I know that was a lot, really fast. I thank you for the opportunity to be here, and I'm happy to participate in any questions we have.
And Carrie, that was great. Common theme between PPP and tax is communicate, communicate, communicate.
Yes.
And please feel free to leverage the slides that we've given you through these town halls. Use the PowerPoints and you've got some great resources within the tax section. So communicate, 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 and set those expectations. All right, really quickly, Carrie's team, while Eric comes off mute. Eric's team.
Why don't we just hit the resources right before we go to open forum, then we can just bring everybody up. You want to just?
Yeah, that's great. There's a great resource that Carrie's team has developed. It's a state tax chart that I talked about last week. You've got the link to it. And as we move on into open forum, this is where I talk about the getting those links to some previous discussions that we've had. If you weren't able to get your question answered today, we've got some good recaps on the town halls.
So let's just cover a couple of these as we're looking for questions. So you've got the top questions here. All of these links work in the downloaded version of the PowerPoint. So more information on the top questions, the FAQ document. This here is just the self-assessment of needs slide, which we continue to leverage. So we put it here in the package. Anything you want to comment here on, Lisa, on the EIDL advances?
No, just trying to keep in mind that there's a full spectrum of business resources available. So look at the ones that might be relevant for your clients or for you. All right.
And then, so then just a couple, and one thing here, just obviously I've seen some questions come in on the funding portal. I just want you to all know, because there's so much to talk about, that twice a week, Tuesdays and Thursdays from 10 to 11, we're doing a full deep dive on everything that's going on there. And there was a slight pause in the accepting of applications as some of the error code items were worked out. That has now been restarted. So applications are flowing. And this is a recorded session. So if you missed it today, you can go watch the archive link here at this CPAloanportal.com. So with that, why don't we just we can just go to the visual here of all of us and see, Lisa, do you see a couple of questions that we can take as we close this out?
Yes. ERC, we didn't get to talk a lot about today, but we do know that's a big issue on the minds of a lot of you. We've been getting requests for an engagement letter template around ERC planning services. We don't anticipate issuing a separate standalone ERC template letter for that. You can leverage some of the tax planning engagement letter templates that you have, or some of the PPP loan advisory engagement letters. So just look for those and edit those as necessary. Eric, lots of questions about the timing of forgiveness applications. Like, are they making it through the system at all? Is there any movement on $2 million loans and above? So we had a conversation about that with our lender friends today. If you want to hit that really quickly.
Yeah, well, they right now, the lenders are all focusing on processing the Draw 1 and Draw 2 applications, and they're not standing up the new simplified forgiveness process. And I think there's practically no movement on the forgiveness of loans above 2 million. Correct. So this is that's something. There's a lot, just like you. There's a lot of pressure in the system. There's a lot of pressure with SBA and Treasury to execute this program. They need to make fixes. They need to put more guidance out. The lenders need to get their platforms working better. The CPA loan portal. That's one that we focus on, and all the lenders are focusing on their platforms. So this is something that a lot of moving parts, and clearly you got to prioritize. So forgiveness right now is not the priority. The priority is these draw one and draw two applications.
Yeah.
Mark, anything you just, I mean, the thing here, right? So it's another full town hall meeting here. And it seems like things are beginning to move though in DC. So
No, they are starting to move, and I think it's more likely than not that there is the larger of the two stimulus propositions that have been made, and part of that is more likely than not to be stimulus checks. And both Carrie and I mentioned the fact that that could have an impact on the IRS. So, again, we think it's going to be the larger package. We think there's going to be state and local. We think there's going to be stim checks, and we think there's going to be more funding for some of these small business programs.
Well, that's a great conclusion. So let's just go now to the final two slides here. Amy, Carrie, thank you so much. Great having you. Look forward to having you on a future town hall again. So here we're staying engaged via social media. Our next town hall is February 18th. If something dramatic comes up, we always will potentially record a town hall. We've been busy. It's been every week since the start of the year. We appreciate this time with you. It's a critical time. We know there's a lot of stress. We're trying to communicate to you everything we know. I want to thank the greater teams for putting together all of the resources for today's town hall. One other thing, do reach out to us. You can reach out to us directly. Lisa or I'm at eric@cpa.com. So I always welcome emails. Send me an email. It's Eric with a K. And wish you all a good night and look forward to being in touch again sometime soon.
Thank you.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.